It's Monday morning in the garage, January 12th, and the system didn't just creak overnight, it cracked. This is not a routine macro week. This is an institutional stress test playing out in real time. Bitcoin is trading just under $91,000. Ethereum is hovering near $3,100. Solana is holding around $139. But price is not the story this morning. Repricing is. Over the last hour, gold printed a new all-time high at $4,600 an ounce. That's not inflation panic, that's governance panic. Gold is repricing trust, not growth. At the same time, while headlines scream uncertainty, capital is voting with size. Michael Saylor's firm just deployed $1.2 billion, buying over 13,000 Bitcoin straight into the noise. That is not momentum chasing, that is monetary positioning. And quietly, almost too quietly, Standard Chartered, a $400 billion institution, announced it's launching a crypto prime brokerage. Read that again. While governments argue, while regulators posture, the banks are laying rails. This is not a crypto exit, it's a system redesign. Now look at what's breaking. Credit is getting hit hard. Capital One is down double digits. Synchrony is getting crushed. American Express, Citigroup, JP Morgan, Bank of America, Wells Fargo, Visa, MasterCard, all bleeding. Why? Because the administration just confirmed a 10% cap on credit card interest rates. That's not regulation, that's price control. And when price controls hit credit, margins evaporate, balance sheets tighten, and risk has to go somewhere else. At the same time, the DOJ has opened a criminal investigation into Federal Reserve Chair Jerome Powell. Let that sink in. When the executive branch investigates the central bank, the firewall is gone. The market doesn't debate motives, it prices precedent. That's why yields are rising instead of falling. That's why the dollar is slipping even with yield support. And that's why gold is exploding higher. Add geopolitics on top. Donald Trump says the US may meet with Iran, says Iran called to negotiate, says Greenland discussions are back on the table, says he may speak with Elon Musk about restoring internet access. This is policy volatility, not policy clarity, and the market hates uncertainty, especially when it's layered. Then comes the final tell. Michael Burry is short Oracle and buying puts, openly betting against the AI trade at the equity level. So step back and look at the full picture. Gold at all-time highs, credit getting capped, banks selling off, the Fed under investigation, billion-dollar Bitcoin buys, global banks expanding crypto infrastructure, equities calm on the surface, hollow underneath. This is not fear, this is capital rotation under pressure. Bitcoin holding above 90,000 tells us liquidity hasn't collapsed. Ethereum being ignored tells us compliance matters. Solana's relative strength tells us growth still has a bid, selectively. This is a week to watch CPI, listen to every Fed speaker, and respect that when institutions wobble, markets don't move in straight lines. The economy may be slowing gently, but the institutions are skidding. And when trust breaks, money doesn't disappear, it reroutes. The board is set, liquidity decides next. Engines hot, safety off, let it rip.